If you've been following Opendoor for a while, you know the story has had its fair share of ups and downs. But every so often we get one of those moments that feels like a pulse check on where the company is heading. Tuesday's session was one of those. The stock seesawed between red and green before finishing the regular session down 23 cents at $7.98 and then closing flat in the aftermarket. On paper that's a fairly quiet day, but underneath the surface there are some important developments that could set the tone for what comes next. And at the center of it all is a man some in the open army are now jokingly calling Astronaut Whale, Eric Wu. Eric Wu, the founder and now board member, has been back in the headlines for a very good reason. He just filed a Form 4 with the SEC showing that he purchased 300,752 shares of Opendoor at $6.65. That's his second insider purchase since returning to the board. For a guy who knows the company inside out and has already built a fortune here, to step back in and buy nearly 1/3 shares sends a clear signal. He thinks something big is coming. Insider buying doesn't always mean the stock is about to moon, but it is one of the most unambiguous ways for someone who knows the business to say, I believe in the future. When you combine that with the other things happening around the company this week, it's hard not to feel that same sense of anticipation. On top of Wu's purchase, Nejatian confirmed on X that Opendoor's new buyer-side product will be rolled out in parts of Texas on Wednesday. He teased the tagline, "We don't want you to own a house, we want you to love a home," and said he plans to share a link so everyone can view the product once it launches. This is the kind of move that has the potential to reshape how people think about Opendoor. For years, critics pigeonholed the company as a glorified house flipper. But positioning the new product as something that helps buyers fall in love with a home reframes Opendoor as a lifestyle and experience-driven platform. It's also a way to tap into new revenue streams at a time when the housing market is trying to find its footing. Retail investors are already buzzing about seeing this new product in action, and if Kaz delivers a polished experience it could become a big narrative driver in the weeks ahead. Meanwhile, Keith Rabois, the man whose return to the board initially electrified a lot of us, continues to show his reach. In the past few days, he's posted photos with Donald Trump and Benjamin Netanyahu. That sparked debate. Some people dislike the optics, others see it as a sign of clout and influence. But either way, it's hard to deny that Rabois moves in elite circles. This is someone with deep connections across tech and finance, including PayPal mafia heavyweights like Peter Thiel and Elon Musk. His presence at Opendoor isn't just symbolic, it signals a pipeline of high-level talent and ideas that could energize the company. When you put that next to Kaz's comment about insanely awesome talent leaving big tech companies to join Opendoor, you start to see the outline of a story that's much bigger than day-to-day price moves. And that's what makes Eric Wu's purchase so interesting. This isn't just a founder nibbling at his old stock. This is a founder with inside knowledge of what's in the pipeline doubling down after stepping back into a board seat. It's not an exaggeration to say that Wu is strapping into the rocket with the rest of the open army. The joke about him being Astronaut Whale Wu works because he's both a big insider buyer, a whale, and someone who is rejoining the mission at a critical time. Retail investors who've been holding through the tough days see that and it hardens their resolve. It's a visual cue that maybe, just maybe, we're still early in the flight. Another point worth noting is how the media is starting to reframe Opendoor. Motley Fool ran an article this week naming Open as a potential growth stock to watch. That's an important distinction. For a long time, mainstream financial media treated Opendoor as a risky real estate or house flipping play. Seeing it labeled as a growth stock is a signal that sentiment is shifting. Growth stocks attract a different kind of investor, people who are willing to look past short-term volatility and value a company on its future potential. That dovetails perfectly with the insider buying narrative and the upcoming product launch. Of course, the stock has cooled off for 2 days after last week's rally. It's been a minor down cycle with a bit of profit-taking and consolidation. But the flat aftermarket on Tuesday suggests that sellers may be running out of steam. With Wu buying, a new product launching in Texas, and Rabois high-profile networking all happening at once, the conditions are there for the stock to regain momentum. Sometimes the market just needs a catalyst to snap back into the green. This week could provide it. It's also worth looking at what the company itself is signaling culturally. Tuesday was the first in-office day for Opendoor under Kaz's leadership. He's been clear that this is going to be an in-office company from now on. Keith Rabois has echoed that sentiment, saying he wants to see people doing real work in the office rather than at home. That's a big shift from how a lot of tech companies are still operating, and it speaks to a culture of urgency. When you're trying to reinvent your company and roll out new products in a tough market, having everyone under one roof can accelerate execution. Combine that with the kind of talent Kaz says is joining and you've got a recipe for faster innovation. And innovation is exactly what Opendoor needs to remind the market that it's not just another real estate platform. If the Texas launch of the buyer-side product goes well and the company shares a public link as promised, it will give investors and potential customers a tangible look at where Opendoor is heading. That's the kind of moment that can reset a narrative. Imagine headlines shifting from Opendoor struggles in tough housing market to Opendoor launches innovative new platform to help buyers love their homes. That's the kind of repositioning that can justify the insider confidence we're seeing. Eric Jackson has also been doing his part to rally the retail crowd. His commentary on X continues to highlight the emotional and socio-economic values behind the open army support for the company. He talks about retail traders as a rising dynasty, people in the middle class looking to break out on one or two breakout plays rather than just accepting the soft strategies of Wall Street ETFs. That's a powerful message. It's not just about making money, it's about financial independence and participation. When you combine that kind of grassroots enthusiasm with visible insider buying and a pipeline of new products, you get a potent mix of fundamentals and sentiment. So where does that leave us heading into the middle of the week? On the surface, Tuesday's flat aftermarket might look like a non-event. But under the hood, you've got a founder doubling down on his own company, a leadership team promising a new product launch the next day, high-profile board members signaling their reach, and a retail base that's been hardened by volatility and is ready for the next leg up. That's not a recipe for despair, that's a recipe for potential momentum. If you're looking for an angle to take from all of this, it's that we're seeing the early stages of a repositioning. Insiders are putting their money where their mouth is. Leadership is moving fast to roll out new products and bring talent in-house. Media coverage is starting to shift toward a growth narrative. And the retail base is still engaged. That's a lot of boxes ticked for a company that not long ago was written off as a failed experiment. The joke about Eric Wu being the astronaut whale captures the moment perfectly. His big, his buying, and his strapping in for the next phase of the mission. As always, it's important to stay level-headed. Volatility is part of the game, especially in a stock like Opendoor. But if you're in it for the long term, days like this are par for the course. There are also opportunities to look at what the people who know the company best are doing. When a founder steps back in and buys hundreds of thousands of shares at a time when new products are about to launch, that's not noise. That's a signal. Combine that with the cultural shift under Kaz and the clout of Rabois, and you've got a story that's much richer than a single day's price action. So as we head into Wednesday, keep an eye out for the link to the new buyer-side product. Watch for any follow-up from Kaz, Rabois, or Eric Jackson on X. And pay attention to how the media covers the launch. Those are the catalysts that could turn 2 days of cooling into the next leg up. If the open army has learned anything from this journey, it's that patience and conviction pay off when you're early to a big idea. To wrap it up, Tuesday's session may have ended flat, but the story around Opendoor is anything but flat. Eric Wu's insider purchase is a clear statement of confidence. Kaz is about to roll out a product that could redefine how people see the company. Keith Rabois continues to demonstrate his network and influence. The media is shifting its narrative. And the retail base is still here, still watching, still ready. In that context, calling Wu the astronaut whale isn't just a joke, it's a symbol. He's on board for the mission. The rocket might be cooling its engines for a moment, but the next stage of the flight is lining up. And if you're strapped in, it's worth paying attention to the people sitting in the cockpit.